Hey guys, how everybody doing? Hope everybody had a good trading week. Welcome to episode 6 of Backtest Fridays. This is not really going to be a long episode as most of the moves that happened this week were just simple break of resistance acting as future support and moving along. But one of the main factors we need to take into consideration is the don't know our little friend the DXY, right? So what is the DXY doing? So since episode 3, I've been telling you about the DXY and how we can use it to our advantage when trading, right? So the DXY is in a channel, right? Right now, the DXY is at the base of this channel. I'm gonna get this more accuracy. Alright, so yeah. DXY is actually at the base of the channel. But there's actually something very, well, actually, it's like a coincidence, right? If you look on the DXY on the 1 hour, every time that it interacts with this specific bottom of this trend line, it's always a heavy impulse move to the low side, right? So here's our first example. Where is it? All right, first example, a heavy push to the low side, right? Second example, heavy push to the low side, right? Third example, heavy push to the low side, right? So a while ago you had some news come out. I don't know why this side like it doesn't want to work, but you have some news come out a while ago saying that, all right, let me just Google it for you guys so you can see it. So US Mexico Trump. That should give me it. All right, Mexico agrees to take border action months before Trump announces tariff cuts, right? So what that basically say is that during this week, a lot of the bearish momentum on the DXY was as a result of Trump announcing that he's going to place tariffs on Mexico, right? So with that being said, he decides that he's not going to follow through with that. That's a plus for the DXY. That's a positive for the US dollar. So looking towards next week, if everything does go according to what I hope happens, if we find some form of transition along this area to push to the upside, then it would complete the move of DXY rejecting this level of support and pushing back to the upside. Now, even if it does push to the upside, we have a couple levels of resistance we have to go take out, because there is this, and that to get back to the upside. But let's see how the week goes. That's the first thing we need to take into consideration. DXY being at the base of the channel. If it's at the base of the channel and reject it, Euro USD is going to go down. GBPUSD may go down and Aussie dollar may go down, right? So we'll have that in mind for the DXY so far. So let's push forward and see if we can correlate this to Euro. Remember, DXY at support. On the flip side, Euro is going to be at a level of resistance, which it is. All of right here is a known level of resistance for Euro, right? All of this resistance. Let's do sell. Right. So all of this is a level of resistance for Euro. So even though it kind of pushed through, it may not be broken, because we can have a candle open just like this and close like this on Monday. So that would be a sell, right? Hold on. One second. Put the right thing. Bear. Yeah. So if you have a candle ending up closing like this on Monday, that would confirm the integrity of this level of resistance and may have the market push back down to this level of support or push back down to a new level of support, right? But I know that what they are for. You see me? What they are for breakdown previous moves them of the week. Alright, so looking at Euro, moves that we could have capitalized on this week. Coming off simple break of resistance acting as future support. So this is the first one right here. We're going to use buy. Alright. So we have this as one and this as the other one. So we had two key levels of support dabbling with this week, and all the market did was just break it, come back to the level of support and push to the upside. On the low time frame, how we could capitalize on this, from our first interaction at support on the break of this level right here. Let me take off this. On the break of this level, any form of bullish candles, bullish indications of this line could be used as buy triggers. So this is one. This is also one. So that's two bullish indications right there for us to take a buy. But like really and truly, there's no way you could have avoided this fake out. No way. So if we take our buy, take our long position at the end of one of these candles, and we use that 30 pip stop loss, we still would have gotten wicked out of this trade. There's no way you could have escaped this. None at all. Right? But it was still a valid trade. We could have took it to the next level of support. Our next level of support would have been this region up here for a good 50. Well, it's basically, let's get the top of this week. It would be 71 pips, but we could not escape this week out. Valid trade, but we could not escape that. Right? So that's one trade for euro this week. There wasn't any other major trade opportunities along this week, as all of these were in last week. But just by a simple break of this level of resistance and acting as level of support and push to the upside. Let's put gold down here again. Good gold, second to last. Actually, we can do gold right now. Gold was very simple too. We had levels of resistance. We had this level of resistance which was broken throughout the week. One level of resistance that was broken. And another level of resistance that was broken right here, and all gold did was tap and goes. What I mean by tap and go is like when we examine this area right here, one area, two area, when we go on the low time frame like the 15-minute chart, all we see is just a simple break of the level of resistance and bullish momentum coming off of it. So entries right along the end of that candle, stops about this is gold, so we use something of the, where is this number, use like a 35 pip stop loss. You can put the stop start right below the entry, 40 pips. There you go, and we'll just take the trade to the upside. So entries on this trade could have given us stops above take profit areas right at the known level of resistance, which is along this area right here. It would actually just tap it, right? And it actually got a second entry opportunity at the other zone, right? So we could have took buys off this bullish activity right along here, because this is a level of resistance which was broken and it came back to it as support. So you see this bullish candle right here, that bullish candle right there, could have put our trades right there, give ourselves a 30 pip stop loss, 30 or 30, well I used 40 for the first one, so let's use 40 for the second one again. Give yourself a 40 pip stop loss and take the trade to the next known level of resistance. So that's two trades that could have produced, well, this trade produced 209 pips and the other one produced 323 pips. So that's two simple tap and goes, just simple break of resistance, acting as a future support and continued on its direction, right? So GBPUSD, same picture as euro. Take out the hint here. Is it right? Same picture as euro. Well, the market was just giving simple break and retest. The market opened here. We had a level, it established a level of resistance through Monday to Tuesday, came back to a broken level of resistance acting as future supports. You could have took trade opportunities along this area easily, but if you did not get this area, you should not have missed this bullish indication right here. We don't even need to go to the low time frame to see how much of a beautiful entry this was. Place your trade, use your 40 pip stop loss, take your trade to the next known level of resistance. That will produce a simple 75 pips. This is not really a good risk to reward, but when you go into profit on this trade, you could have cancelled out a lot of your risk and carry yourself risk free on this position, pushing to the upside. So same thing with Aussie. Literally at the open of the week last week, we had perfect entry opportunity. This was the highs of last week. Price broke it and came back and gave these two bullish indications right here. 1, 2, right? Simple. Same story as all the other currency pairs. Aussie, we can give yourself a 25 pip stop loss on Aussie because Aussie takes forever to move 2 pips, right? And we'll just take the trade to the known level of resistance, right? We'll just take our trade to the known level of resistance. So our known level of resistance along this area would have been actually 2. We would have 1 right here and 1 right here. But it's crazy to enter a trade to take profit right there. So yeah, that's pretty much it for Aussie. We also had this demand region. All of here was acting as support. So we could have gotten another entry opportunity off this level. So that's pretty much it. 58 pips, nothing to call home about. US dollar JPY. So USDJPY has been accumulating along this area. So entry opportunities and trade opportunities that could have happened this week are, we had a trend line in play. It's not really the best of trend lines. It's kind of choppy, but it works. So we had a break of it and bullish momentum coming off of this trend line per se. This could have been an entry opportunity right here. I'm looking to take US dollar Japanese yen to the known level of resistance along that area. Let's fix this up. My entry is somewhere along this area though. Somewhere along this region. I think it's right here. One of my students, Jermaine Johnson, big up yourself, you know, he gave me this trade. He sent me this trade. So it's a valid trade. But I'm looking to take this up to the known level of resistance along this area. And that's the only thing I see this week for US dollar JPY. It's just been consolidating through this region, and it's not even a good consolidation region because it's only 40 pips taking spread and entry opportunities and entry confirmation into consideration. This region would only end up being like 35 pips, so that's not really worth going into trade. That's bad risk to reward ratio right there. So GBPAUD, right? For GBPAUD, we had one entry opportunity this week. And as I said, it's the same situation as most other currency pairs this week. We had a known level of resistance, price broke it and gave us this bullish engulfing right off of it. You see me? Boom. Quick, simple, easy trade. So GBP pair, give yourself 45 pip stop loss, and it could be looking to take this up to this level of resistance. Well, not really good risk management, but because I'm not going to risk 45 pips to only gain 78 pips. And on the flip side, I am actually short on GBPAUD from this level of resistance. I believe the market will be shorting from here and pushing to find the new lows, probably even break the level of support which is holding up price right now and push to some new lows. That's my observation for GBPAUD going into next week. And yeah, over on USDCAD, like simple break and retest of a trend line. We had a point A along this region, a point B along right here, a point C along right here. The market interacted with some form of resistance to the upside, some form of resistance up here. You may not be able to get in the trade from up here, but if one place you should not miss is on the lower time frame, like the 1 hour, we'll have our point A, our point B, our point C, our break. Notice, when it broke the trend line, it had this level of support acting as resistance all along this area. Broken support, future resistance. In conjunction with that broken support, we also have this bearish variation coming off the broken trend line. So this was a perfect entry indicator to push the market short. Entries at the end of that candle, give yourself a 30 pip stop loss because it's a US dollar pair. It may not move and go all over the place, but you could have one trade coming to right there to get 72 pips. Oopsie, let me fix this. It could have another trade coming off of this level right here because it broke this level of support right here and acted as resistance. Give yourself like a 20 pips adjusted risk, or just put your stops above the last known level of resistance. So you can give yourself like a 25 pip right here. So and push to the known level of support. So this is two good trades that you could have been in for USD CAD. This one producing over 200 pips, and the second entry producing 129 pips. So that's pretty much it for Backtest Fridays this week. Take note of this indication on the DXY. This is very important. And as I said, with the Trump and Mexico sorting out whatever they must sort out, the market may just gap to the upside, pushing Euro and GBP and Aussie US dollar to the downside. Yep. So trade safe, guys. Hope you all have a wonderful weekend, and big up on yourself as always.